go ahead and dive into our content. Got a lot of stuff to cover here in our hour. I will ask that maybe if you're able to stick around for a couple of minutes, it's very likely that I may be likely running right up to our full time together and over. But I'll try to get through all of this information as quickly and as concisely as I can. Just really quickly about us, the firm is Left Brain Professionals. Excuse me, we are a boutique accounting firm in that we work only with government contractors. We do a lot of work helping clients obtain an adequate accounting system, which is what we're going to be talking about today. And in fact, we've got several clients right now that we're working with on this particular process in terms of getting them set up, with QuickBooks, QuickBooks Time, and some other tools to be able to do everything that they need to do. And we'll talk about some of those kinds of things throughout the presentation. If you interact with us later on, it's very likely that not only would you meet me and interact, but also with Steve Bressler, who you see there. Steve and I work hand in hand on all of these projects. Our learning objectives for today, at the end of our time together, you should be able to recognize the need for an adequate or approved accounting system, list the criteria for an adequate accounting system, describe the components of an accounting system, and explain some of the best practices for successfully passing the survey or audit that's related to the adequate accounting system. All right, why or when do government contractors need to have an adequate accounting system? The first is, and where we oftentimes interact with many companies, is because they're participating in the SBIR STTR program. And particularly if you are in the phase 2, if you're doing something in phase 2. And the reason for that is because usually, and I always have to say usually, those phase 2 awards are cost type awards. They're not fixed price. We do see some exceptions to that from time to time, but again, typically on the phase 2, those are cost type awards. As we talk about these reasons for an adequate accounting system, you're going to constantly hear me talk about cost, right? So that's going to be your key, something you need to be thinking about when you're looking at any types of contracts or awards with the government. If you start hearing cost type contract, cost type award, that's going to be a clue to you that you need to have an adequate accounting system. As well, you'll see here in the presentation when you get a copy of it, that there are links, so you can click on these links and go directly to additional information that we provide for you. I already said, cost type contracts, right? So cost reimbursable contracts, and this includes all of the various flavors, and that's cost plus fixed fee, cost plus award fee, cost plus incentive fee, as well as some cost sharing contracts. Other times that you'll need an adequate accounting system are for time and material. This is one that often escapes many people. They think, oh, we negotiated a fixed price on the labor, and so I'm not submitting any cost type invoices, so I don't have a requirement. Not true. If you are performing time and material contracts, they are considered flexibly priced contracts because of the M or material portion, which is usually reimbursed at cost. Now, the one exception to this are if you have labor hour contracts, meaning that you really only have a T type of contract, only time. And in that case, we don't call it a T contract, we call it a labor hour contract. So if you have a labor hour contract, it is exempt from this. But if you have a time and material contract, you do have a requirement for this. Also note that if you have a fixed price contracts with progress payments, and notice that this is progress payments, not performance-based payments. Performance-based payments are objective measurable items. Progress payments are based on cost. Again, that cost word coming out being the clue there as to why I need to have an adequate accounting system. Also as well, fixed price contracts with prospective or retroactive price redetermination. And the reason here, again, is because that redetermination, you're going to submit cost information, right, in order for the government to agree to that price redetermination. And so guess what? The adequate accounting system is going to be a requirement here. A couple of other key things that I will want to make sure that you understand is that these requirements exist at both the prime level and at the subcontractor level. So we've had clients who show up and say, well, we've only been a sub and our prime said that we didn't have to do these things. That's not true. The other piece that's very closely related to this, and I'll try not to get too far off topic, but it's a great connection here. If you're performing cost type contracts or T&M type contracts, not only do you have to have the adequate accounting system, but you also have to submit the incurred cost proposal at the end of your fiscal year. So there should be a couple of clues here in this. And again, we're constantly running into clients who didn't realize that they had to submit that incurred cost proposal. They said, well, we were only performing at the subcontractor level. Okay. Again, if you're any of these T&M or cost type contracts, you have to have an adequate accounting system. If you're performing on those, you need to submit the incurred cost proposal. Another clue would be that if you went through the SF 1408 with the government and they came and actually, evaluated your system and gave you a letter, that would be another clue that you need to submit that incurred cost proposal at the end of your fiscal year. The other types of contracts that come into play are also fixed price incentive contracts, because again, there's cost type information that is submitted to determine how well you performed from the incentive perspective. And then the other kind of generic is if you're participating or proposing any multiple award contracts, MACs, or government-wide acquisition contracts, GWACs. The reason, and again, the phone call that we will get is, hey, we want to participate, for example, in OASIS or CIO SP4. CIO SP4 was the big contract or big proposal that's out right now from the government. And clients or potential clients will call and say, we've only ever performed fixed type work. Why do we have to jump through these hoops if we want to participate in this contract? And the reason is because the contract vehicle itself has the ability to issue time and material and cost type awards. And because of that, if you want to participate on that particular contract vehicle, then you have to have the adequate accounting system. So just be aware of that as you're looking at government contracts, as you're potentially, you're looking at various RFPs that are out there. If you know this is going to be a multiple award contract, be advised that you're very likely going to have that adequate accounting system in place in order to participate. All right, let's talk about the specific criteria that are required for the adequate accounting system. And again, just a quick reminder, if you've got some questions along the way, be sure to drop those in the chat, and then that way we'll be able to review those and try to answer your questions at the end of the presentation. So there are 15 basic criteria for the adequate accounting system. The first is that the system has to be in accordance with GAAP. GAAP are the generally accepted accounting principles in the U.S. Some of the things that we're typically looking for, one is that your books have to be maintained on an accrual basis, not a cash basis, which is something that is sometimes a new concept to small business owners who are typically a cash basis and probably still a cash basis taxpayer. And the reason for that is, cash is easy. Cash, from a tax basis, most small businesses are cash basis. As an individual, we're a cash basis taxpayer. But in order to be GAAP compliant and in order to have an adequate accounting system, it does have to be accrual based. And that simply means that we are recognizing revenue and expenses when they occurred, not when the cash changed hands. Okay, so that's one of the big differences there. There's a series of questions here under number 2. One of the big things, obviously, that the government wants to make sure is that we have a proper segregation of direct and indirect costs. So what are direct and indirect costs? Direct costs are those that are directly attributable to a final cost objective, such as a contract, a project, a job, a specific product, or a specific service. Um, Indirect costs are costs that are attributable to more than one final cost objective. In that case, they would end up in overhead, or it's a cost that is beneficial to the business as a whole, which means that it would then be part of G&A or the general and administrative pool. The other thing that we have to think about when we are putting together accounting systems, and you'll see some references here today about CAS, or the cost accounting standards. And you may have heard, and you may be thinking, well, I'm a small business, I don't have to comply with CAS. That very well may be true, but there's a couple of things you need to know about CAS. The first is that there are some CAS that apply to all businesses, whether or not you have CAS covered contracts. It's usually around materiality, meaning that if the dollar amount in question is material or large in nature, then you have to comply with that particular CAS standard. The other is that, the government auditors and other people look to CAS for guidance. And so even though you may not have a CAS covered contract, we're always going to consider CAS when we're looking, again, at the when we're evaluating somebody and looking for guidance on something. Number 2B here is the identification and accumulation of direct costs by contract. In simple terms, this means doing job costing. Now, job costing for government contracts is a little more complex, and it's a little more than what your QuickBooks file itself can do. So if you're familiar with QuickBooks, you can run a profit and loss by customer and by job. That'll get you part of the way there for government contracts, but there's some additional reporting requirements that are necessary in order to satisfy the government. You need to have a logical and consistent method for the allocation of indirect costs to intermediate and final cost objectives. This means that when we set up the cost pools, and typically when we're talking about cost pools, we're talking about fringe, overhead, and G&A. Now, larger or more complex organizations may have multiple overhead or multiple fringe pools, but as you're getting started as a government contractor, a single fringe, a single overhead, and a single G&A are pretty common. And when we're setting up those pools, we have to have a logical, causal, beneficial relationship, meaning that there's a strong connection between the pool and the base. And in the case of fringe costs, we are incurring those fringe costs. So fringe costs are things like employer taxes, health insurance, retirement, paid absences. We can see that those types of expenses are related to our W-2 employees. And so therefore, we would allocate fringe over all of our W-2 labor. That gives us that logical, causal, beneficial relationship. We have to have accumulation of costs under general ledger control, meaning that we've got sub-ledgers that tie to the general ledger, and we have the appropriate internal controls in place. So for example, things like accounts receivable is something that has what we refer to as sub-ledgers. So when I look at the balance sheet and I see your accounts receivable, there's a dollar value there, but there's a separate sub-ledger that actually lists all of the invoices that tie up to that total amount of accounts receivable that's listed on the balance sheet. General ledger control also means having appropriate chart of accounts, internal controls, evaluation around those types of things. Timekeeping is a big topic for the government, and the other thing that kind of hear me say that as we go through today's presentation, we've delivered a number of webinars, and oftentimes one individual slide in today's presentation can often be an entire webinar because there's a lot of information that goes into it. So today, the goal is that you're going to walk away with a general understanding of when and why an adequate accounting system is in place, kind of have an awareness of what's involved in the process, but know that, again, many of these topics are deep topics in and of themselves. So timekeeping is a big issue for the government. And why is it that? Labor is the #1 expense of almost every business out there. And and so when the government is buying products or services from you, they know that labor is a big part of your expense. And especially when they're buying services from you, then labor is absolutely your number one expense, right? So the government wants to make sure you're getting it right. They want to make sure that the time collection is correct, that the time is allocated to the appropriate jobs correctly, that the hours are converted into dollars through labor distribution, which we'll talk about in a moment, and that all of that is reported appropriately, that the employees are paid for all of that, and that you as an employer are paying taxes. So those are some of the things that when we do various types of audits for government contractors around the incurred cost proposal and around the accounting system, we're looking for those types of things, that if Joe puts 5 hours on his timesheet to a specific job, that's what's on the invoice, that's what was paid by the government, that's what's on payroll, and that's what he was paid, and that we also paid our portion of the employer taxes on all of that as well. So you can see there's a lot of information that gets evaluated to ensure that timekeeping and labor distribution are accurate. The other thing that we put here from a timekeeping perspective is that clients should have, and we very, very strongly recommend that you also have jobs set up for your indirect work. So people usually set up jobs for their direct projects, but we recommend setting up jobs for your fringe, overhead, and G&A so that it's easy for employees. They have one methodology to enter their time, and then it's also easier for you from a reporting perspective to be able to build the various reports around this job reporting. Labor distribution I mentioned previously. So labor distribution in simplest terms means taking the hours from the timekeeping system and converting them into dollars. It also means then distributing those dollars across jobs, both direct and indirect, and throughout the general ledger. So one of the things that we look for when we, when we start working with the client in general, but definitely when they want our help to help them get the adequate accounting system in place, we look at labor and we try to figure out what's going on from the general ledger. Because oftentimes many small businesses, especially either those getting started, maybe they've worked with an accountant who's not familiar with government contracting requirements. Maybe it's a company that was previously doing commercial work and is just now getting into the government space. They will often and usually have a single labor expense account. It'll be called salaries expense or labor expense or whatever they call it, but they'll have a single account. Well, for government contracts, that's not sufficient, because in order to properly calculate the indirect rates for fringe, overhead, and G&A, we need to have that labor broken up to direct labor, overhead labor, and G&A labor. The other piece that's important, and again, we run into this, is that from a cash basis taxpayer, oftentimes they're reporting the cash out of the bank, right? So they've got that side of their record. But then the other side, they don't properly break out all of the fringe and labor costs. They lump them all together, and that causes problems in our ability to properly calculate the fringe costs. So we actually have to have, when you get that payroll summary report from your payroll provider at the end of the period, we actually have to have a journal entry that properly records the employer's portion of the taxes and the labor, so that, again, we can do these proper indirect rate calculations. Other criteria for the adequate accounting system is that we have to have interim, at least monthly reconciliation of the books. This essentially means that we're closing the books at least monthly. Part of that closing process is that we're reconciling the checking account, the credit card. We're reconciling the job ledger and making sure that everything has been posted correctly. And then obviously in the case of government contractors as well, looking at the indirect rates and making sure that all of the rates were calculated and monitored. All right, another concept here that is unique to the government and to government contractors is this concept of unallowable costs. And some people will say, well, what is that? Again, we've got an entire webinar on this, and so I give a shout out to the Nebraska PTAC. We've done some other work with you guys, there are other topics here that may be of interest to your team, and so we may want to circle back and dive into some of these subtopics. In the case of unallowable costs, the government has determined that some costs are simply not allowable, not chargeable to the government, not includable in indirect rates. Now, it's important to note here that these may or may not be tax deductible. So when we talk about tax deductibility and cost allowability for the government, they are mutually exclusive, separate topics. They're not related. Now, again, many of these costs that are deemed unallowable by the government, again, may or may not be tax deductible, okay? So that's a separate thing to think about. One of the things, though, you do need, you've got to have written policies and procedures around all of your accounting practices, and some of the specific items that you need to have in here are some around unallowable costs, and that includes timekeeping and the expense reporting, because yes, you can have unallowable time and unallowable expenses. Some potential, give you a couple of quick ideas of what some unallowable expenses are. Alcohol is always unallowable. Interest expense, trade shows are typically unallowable. There's a very narrow exception there that almost nobody ever gets through. Charitable contributions are unallowable. And again, you can see that many of those types of costs may otherwise be legitimate business expenses, may or may not be tax deductible, but the government says you simply can't include them in the costs that you charge back to us. Some of our other guidance is making sure that you have in your chart of accounts separate GL accounts to track these and identify them, because government auditors are going to look for that. They know that companies get the unallowable costs wrong. It's low-hanging fruit. It's something that they always look for, and unfortunately for many clients, it's also where the auditors find errors. Because these costs have to be excluded from the rates, right? That's something else that the auditors are going to look for, is to make sure they're going to look at that composition of your pool and your base, make sure that you've properly reported and calculated for the unallowable costs. Here as well, another reference to CAS, or the Cost Accounting Standards. CAS 405 gives us some very specific guidance on the treatment and the calculation of unallowable costs. Now, the specific unallowable costs themselves and figuring out what's allowable and not allowable is in FAR 31. CAS 405 gives us specific reporting requirements, not actually determining whether the cost is allowable. 2I here takes job costing to the next level. So not only do we have to be able to do job costing, but we also have to be able to do job costing at the CLIN or SLIN level. So that's the contract line item number, the subcontract line item number, and potentially by units if each unit or line item were a separate contract, okay? So that means that when you get a contract from the government, you've got a top level contract. If you've got 5 CLINs, then your accounting system from both timekeeping and expense reporting, I should be able to see a customer. Underneath the customer, I see a contract. Underneath the contract, because your contract had 5 CLINs, and I should see 5 line items, right, and all of the appropriate costs associated with those appropriate line items, right? It's not acceptable to take all of those costs and just charge them to the top level contract. We actually have to be able to identify them at that, again, lower level CLIN or SLIN that's identified on the contract. All right, segregation of pre-production cost from production cost. So this means things like, and we see this more from manufacturing. I mean, it certainly could come up in a service-oriented world, but it's oftentimes where we're prepping something for a contract. And usually the way that we're able to bound this is through the period of performance. So a very, very important concept for you as a government contractor is making sure that you abide by the period of performance, meaning that you cannot, you can incur costs or time outside of the period of performance, but they're not chargeable back to the government, okay? So let's say you have a contract, you're going along, maybe you've asked for a modification or an extension, and you haven't received that modification and the original period of performance is up. If you continue incurring costs or time beyond the period of performance, you are going at risk. The terminology is that you're going at risk, meaning that, right, you're incurring those costs outside of the period of the performance. They're not going to be billable back to the government unless and until you have a modification that allows you to bill those costs. Now, many times we do see that those modifications, do come through. There can be time delays involved, which is a separate conversation. But you want to be very, very careful that you're monitoring the period of performance. That's why it's going to be critical in your timekeeping and in your expense reporting system that you have the ability to put period of performance so that when that period of performance ends, an employee can no longer charge time. And if you're going to charge time or expenses beyond that because you're going to go at risk and you're going to potentially eat those costs, you need to set up a separate charge code to track those at-risk costs until you get the modification. Some other concepts for government contractors is that you may receive a contract that has a limitation of costs or a limitation of funds or limitation of payments, okay? So this means that the government, perfect example, oftentimes we'll see contracts where the government says, here's a $500,000 contract, but we're only gonna fund this for $200,000 right now. And there are different reasons why they do incremental funding. Sometimes they don't have all the funding available. Sometimes it's crossing over fiscal years for the government, and so they have to wait until the next fiscal year when they get their allotment, and then they can provide additional funds on the contract. Again, there are different things that come into play, but you got to be careful that do I have some type of limitation of cost, limitation of funds, or limitation of payments, because your accounting system needs to be able to track and report those kinds of items. One of the other things that is special and unique about this, and where companies, where we see clients get themselves in trouble, is that the requirement is that you have to, oops, let me back up, I went too far. The requirement is that you have to notify the government when you're going to trip over 75% of the funded amount or the limitation of cost amount within the next 60 days. Now notice that I did not say notify them when you trip over 75% of the funded amount. I said when you're going to trip over 75% in the next 60 days, meaning that I've got a forward-looking forecast, that I have a burn rate, that I'm tracking not only what my actual cost to date are, but that I know what my burn rate is, meaning that I know, hey, on average, I'm burning X dollars per day or per week. And so I can forecast and I can look at my schedule of costs and say, okay, I'm at 60% today, but if I continue on at this current rate, yes, I'm going to trip over the 75% mark within the next 60 days. I need to notify the government now. And the reason for that is because, you're basically going to go to the government and say, hey, we're going to be 75% through the money, but maybe maybe we've only got 60% of the work done, right? Meaning that it's costing me more to do this than my original estimate. And so you're going to say, hey, government, I need more money. They may or may not give it to you. Again, another conversation. But assuming that they are going to give you additional money to continue on this contract, they need time to process that, right? And so if you wait until you're actually at the 75% mark to notify them, then you run into the problem where then all of a sudden you're at 100%, right? You've burned through all of the funding, and the government is still processing paperwork on their side. So it's really, really critical to have that forward-looking reporting and be able to say, okay, this is where I am now, this is what my burn rate is, and I'm going to hit the, based upon my estimate, I'm going to hit, the 75% mark. So today's August 26th. I might be looking forward and say, man, based on this, it looks like I'm going to hit the 75% mark on October 25th. Well, that's 60 days from now. I need to notify the government, right? I'm going to have to get that in there. So again, I get the funding and I can continue on uninterrupted. Your accounting system needs to be able to provide support for progress payments. Remember early on in the presentation, I said that progress payments are based on cost. So guess what? I need to have the appropriate cost type reporting, just like I would have for any other cost type contract. Even if it's a fixed price contract, if it's got progress payments, I'm going to have to provide cost type reporting so that the government can reimburse me for that. One of the other questions on the SF 1408, is the accounting system and are the records maintained such that adequate, reliable our data are developed for use in pricing follow-on acquisitions? Right? Many times when we are proposing something to the government, when they're evaluating our price, whether that evaluation is a little more on the informal side, just through some cost analysis, maybe they're doing fact finding. Larger proposals, we see they actually perform audits on the proposal itself. One of the things they're going to look at and evaluate is to say, okay, this is what you proposed for a cost. Where did you come up with that cost? And you're going to say, well, based on history, might be one of your answers. And so they're going to say, okay, well, now show me your history, right? And let's validate the history so that I can now validate your proposed cost in this RFP. So the accounting system has got to be able to be well organized and maintained that it can provide that kind of reporting. And so some of the reporting there is going to be things around, average cost per labor hour for specific labor categories. It's going to be costs for types of materials. It's going to be the hours and costs involved in a specific type of product or service or a particular phase. For example, maybe you sell different types of services. Maybe you've got a menu board of 20 types of services, and when somebody comes to you, they're kind of mixing and matching, right? So I'm getting ready to take my dog to get groomed, and so when I go in to book, it says, well, do you want a bath? Do you want a haircut? Do you want the de-shedding? Do you want their teeth cleaned, and all these other things, right? And you can buy the full package, or you can, I can randomly select, well, I want 2 and 4, or whatever the case may be. Well, if that's the type of business structure that you have, and the government comes in and they said, well, we want to buy number 2 and number 4, and you say, okay, well, here's the proposed price, they're going to say, okay, well, show me history, right? Because if you say, hey, I proposed this price based on historical experience, they're going to say, well, then show me the history where you provided, services 2 and 4 to other people, right? So that I can validate that, that there's an alignment between the historical cost and what you're proposing in this particular proposal. The last question on the SF 1408 survey, is the system currently in full operation? Now, there's a little trick to this, and what we see sometimes is that we help clients get the system in place because they know they're going to have an award in the future, but they may not enable or they may not activate all pieces of the system until that award is made, and that's okay. The survey is just saying, is the system able to do what it's supposed to be able to do? And we just need to note that in the survey. Let's talk about the components of an accounting system. So your accounting system is made up of software. Software is only one component. Oftentimes when we talk about people's accounting software, they say, or accounting system, they'll say, well, we use QuickBooks. Yes, QuickBooks is part of your accounting system, but we also have to remember that in today's world, we have various apps, tools, files, worksheets that are also part of our software environment that is a subset of the accounting system as a whole, right? Many companies use a timekeeping or expense reporting apps. Oftentimes we're performing certain calculations in Excel. We may have other add-on tools that we use with QuickBooks, such as iCat, that perform some of these calculations for us. Those are all acceptable tools to use, but we have to disclose them and we have to document them in our accounting policies and procedures. Our software is going to handle things, again, like general ledger, so our QuickBooks as an example, timekeeping, expense reporting, payroll, right? So we've got to pay our employees, and even though we're outsourcing payroll, most people do outsource payroll in today's world, that is still part of our accounting system, and we have to show how it's included. Indirect rates, again, a big part of government contract work, so we have to show how we're calculating indirect rates. Could be doing something as simple as using an Excel file, which is perfectly acceptable and will pass an audit. But again, you may be using, it could be included if you're not using QuickBooks. There's other software out there that's been designed for government contractors that will handle the indirect rates, so it may be included there. Or you might be using, again, a tool like ICAT that works specifically with QuickBooks Desktop. Your policies and procedures, and I really should make this the first bullet because your accounting system really is about the policies and procedures and the internal controls. When we look at the software is a tool for implementing the policies and procedures and for implementing the internal controls around the accounting system. But the accounting system really is driven by our written policies and procedures. Let's talk about some of the myths that you may have heard or will continue to hear over time. One is that you'll hear people say, well, DCAA approves accounting systems. No, they do not, okay? The DCAA or any CPA or auditor, they perform a survey or an audit. They provide a report to the contracting officer, and the contracting officer is who actually makes the determination of whether or not your accounting system is adequate. Now, and I would say probably 99.99999 times out of 100, they're going to follow the guidance right from the auditors, but there are times we have seen exceptions where a contracting officer has granted somebody or essentially given them kind of a temporary approval. So they've said, hey, you know, you've still got some issues that are in your audit report here. We want to move forward. We're willing to do that. We're going to go ahead and make the award, and there will be a stipulation in the award that you have to resolve the issues by a specific date, by a specific time, okay? But that, again, is up to the contracting officer, not to DCAA or any CPA or auditor. Some people say, well, I can only use DCAA approved software. False. DCAA does not approve any software, okay? No vendor can claim or guarantee DCAA compliance, acceptance, or approval. Now, that said, there are, again, accounting software and tools that are designed for government contractors. They're designed to handle these things. They're designed for DCAA compliance. However, simply because you buy it doesn't mean that you're magically in compliance or that you're magically going to pass the audit. It's how you use the tool, it's your written policies and procedures and having the internal controls in place, and how that tool is a part of the overall ecosystem of your accounting system. And let me pause there for a moment and say as well that if you're dealing with, if you're looking at any accounting software online, if you're dealing with a vendor and they guarantee you compliance, I'm going to tell you to run very fast, because they can't guarantee you compliance, okay? It's up to you and how you use the tool and how you implement it and maintain it over time. No DCAA is guaranteed to be, no software is guaranteed to be DCAA compliant. Any software can actually be DCAA compliant. And as I've said here, it's really in the policies and the procedures. It's the configuration and operation of the software and the tools that you're using. And the quick story I like to tell people is I can get you an adequate accounting system on the good old-fashioned green bar paper. Maybe some of you are old enough like me to remember when I was in college and taking accounting classes, we actually didn't have any computer-based accounting class. I'm not that old, but we didn't have any accounting or computer-based accounting classes when I was in college. It was all green bar paper. And I remember having these big sheets and books of stuff spread across my dorm room when I was working, right? And I'd be running from side of the room to this side of the room, you know, keeping up with everything on the green bar paper. That will get you an adequate accounting system. It's just not going to be very efficient. All right, I promised you that we would talk about some of the best practices for passing the survey and audit, and that we'd have some time for questions. So I hope that you either have some questions in the chat, or we can certainly, I think I've opened everybody's microphone here in a little bit. You can unmute yourself and ask any questions as well. All right, let's talk about these best practices for passing the survey or audit. First and foremost, when we talk about audits, it's a three-step process. It's say what you do what you say, and have evidence to prove it. So what does that mean? So the say what you do is having written policies and procedures, okay? And the critical part there is written. You've got to actually have written policies and procedures. and they need to be reviewed and updated at least annually. Why? Things change, people change. You may, start doing new types of contracts. You may change the treatment of a particular cost. We do see, that there are updates to the FAR and the DFARs. DCAA puts out new interpretations of stuff. So we have to make sure that our policies and procedures reflect that. Number two is to do what you say. That means having worktop or desktop instructions for your software, for the apps, for the tools or files that you use, and making sure that you actually use them. During a survey or an audit, auditor's going to come. They're going to, outside of the COVID world where, a lot of things are still happening remotely, but otherwise the auditor is going to come. They're going to sit at your desk. And one of the observations they're going to make is, when you're performing these accounting tasks, did you pull down the policies and procedures, and did you use them while you were, performing those tasks? That's one of the things that the auditors want to know. And then the last is having evidence to prove it. So that means the records, reports, receipts. Note here that in particular, the SF 1408 is a survey. It is not an audit. They're not going to do deep transactional analysis, but they will ask for some things. They're still going to look at least sample expense reports, sample timesheets, and other types of things, because they want to see, are the documents structured in a way to be compliant? And actually during a specific audit, when I look at those historical records, right? So let's say I'm actually performing a post-award audit, or I'm doing an incurred cost audit, again, a true audit, and I'm evaluating expense reports. I want to look at, when I've got that expense report open, when I'm looking at it either online or on a piece of paper, I want to see evidence there that shows me you followed your written policies and procedures, and that you did, right, what you said you were going to do. When it comes overall to these accounting systems and really any type of audit, but start early, particularly here with the accounting system. I know when we're working with the P-Tax, we're working with companies who are just getting started. Maybe you're getting your first contract right now. Now is the time to get your accounting system in place. Even if it's only a fixed price contract right now. And you might say, well, Robert, I don't have any cost type contracts. Why would I do this? The reason is because it's easier to lay the foundation and build upon it. There's some things that we can show you, some very basic things that we can get in place and keep you out of trouble. Because what we see happen is companies go out on their own and they think, well, I don't have to worry about that for another year or whatever the case may be. And they go and do a bunch of stuff. They develop habits. They set up systems. They set up reports and charts of accounts that are not adequate, and so we end up having to undo and fix a bunch of stuff later on. That's why it's a lot easier for us as a firm when we're working with you. We can provide you the best guidance and the best setup early on, and then we can build on it. We can do it in a bite-sized approach as well. So that's the other thing is, and we do this with clients. They come and they say, hey, what does this mean to get an adequate accounting system, and what do I have to do? And we talk them through it, and they go, maybe they're not ready for that. Maybe they don't have the cash flow for it, and that's okay. We say, you know what, if you can invest a few hundred or maybe a couple of $1,000s, we can at least get some of the basic stuff. For example, we can get your chart of accounts in place, right? Get the appropriate chart of accounts with the breakout for the fringe, the overhead, and the G&A. We can show you how to properly set up customers and projects in QuickBooks. We can show you how to start calculating your indirect rates. And then as you grow, now you've got that good foundation, you've got some good practices started, so that when it comes time to have a cost type contract and you're going to go through the survey or you have to submit the incurred cost proposal, now things are going to be a lot cleaner and neater and easier for you to get through that process. The other thing that you're going to want to do, so here's an important thing to know. If you're going to work with the Department of Defense, with NASA, with NSA, with a couple of other agencies out there, they're going to use DCAA to perform the survey. And DCAA will only use, and DoD, for example, will only accept a report from DCAA. They will not accept a report from us as a third-party CPA. However, if you're going to be a subcontractor to somebody, your prime contractors will accept reports from us. many of the other agencies and offices in the federal government will accept a third-party CPA report. They don't have the audit staff to be able to do this themselves, and so they will accept a third-party CPA to come in and do it. One of the nice things about, working with us or working with another firm is that we can get you ready and have everything in place for you so that when the auditors do come in, even if so, in the case of DOD and DCAA, even if they're not going to accept our letter, the fact that you've worked with us or that you've worked with somebody like us to get all of the stuff in place, then it's much more likely that you're going to have a successful audit or survey without any issues. And in fact, what I can tell you is all of the clients that we've worked with, when they've gone through the SF 1408, we've had a 100% pass rate, 100%. Now, auditors certainly will at times, find a little something here, a little something there that they want tweaked, but it's nothing, significant that, is going to cause somebody to fail in any way. So, I highly, highly encourage you to work with somebody who knows what they're doing. They can help you prepare. They can perform that mock audit, and they're people who, again, know the process overall. We've covered a lot of information. I know I've been talking fast. Again, we'll have a copy of the recording and a copy of the presentation that I'll get to Veronica and her team that she can distribute. I'll get my contact info up here, and then we'll talk about we'll do some Q&A here in a moment. You can find us at leftbrainpro.com. If you have a question that comes up later today, maybe when you're listening to the recording or looking at the PowerPoint slides again, you can shoot us an email, support@leftbrainpro.com. That's the best way to get a hold of us, and we'd be happy to answer any questions and help point you in the right direction. All right, so with that, Veronica, I'll turn it back to you. I don't know if you've got anything, and also I would say that if somebody out there wants to unmute your microphone and ask a question, we can certainly do that as well.
Sure, and we can definitely take the questions in the chat box or not. If you just can mute yourself and speak up, that's great. While you're trying to do that, if you do have questions, I do have a question for you as well. So you didn't mention anything about profit, and I know that that's a conversation in itself as well. But we have a lot of our clients, a lot of the contractors are coming to us and their first time government contracting companies, and they don't necessarily know how to do business with the government, right? And their question is, what profit should I include? What's acceptable?
That's always an excellent question. So I answer it a couple of ways. The first is that there are only 3 limitations on fee or profit that are defined in the FAR. The first is for R&D contracts. And so that's when the government actually comes to you and issues a research and development contract that you're trying to solve a problem for the government that they don't know how to solve. R&D contracts for cost type contracts, and an R&D contract should be a cost type contract. That is limited to 15% fee. There is another stipulation for architect engineer contracts, and it's not a specific limitation on the fee or profit itself, but it simply means that the architect engineer contract cannot be more than 6% of the cost of the project itself. So for example, if the government's going to build a bridge, right, their architects and engineers are going to have to be involved to design it. Simply means that the architect engineer's contract to do that design work cannot be more than 6% of the cost of building the bridge. And the last one, again, for limitations in the FAR, is for all other cost type contracts are limited at 10%. Now, so you say, well, what if I'm doing fixed price contracts or T&M contracts? I can't tell you that the fee or profit is unlimited, but I will tell you that, the other big factor is that the government is going to look at fair and reasonable pricing, right? At the end of the day, it doesn't matter what the fee or profit or cost is this a fair and reasonable price? They're going to look at the market for those types of things. So they're going to say, how much is what are other people charging for this type of service. So that's one factor that when you're putting together your price is to know what the competition is doing and what's happening in the marketplace. But I will tell you, again, rough numbers, that for fixed price work, for stuff that's otherwise, kind of generally found in the marketplace, I would tell you that something in the 15 to 20% profit margin is reasonable. Now, the other thing to be careful of and to know is that if it is a fixed price contract, the government is not supposed to ask for your profit percentage or any of the cost elements. It is a price. They're supposed to be evaluating price only and not any of the individual cost elements or the profit that you've proposed in it. But, I would say again, and what we typically see for most of our clients is that if they're, again, on fixed price and T&M contracts, again, where the T is a fixed price labor category, something in the 15 to 20% range is usually pretty common.
Thank you, Robert. Any questions from the audience? I don't see any in the chat for now.
Okay. Well, again, everybody, you can always, questions come up later. Shoot us an email, support@leftbrainpro.com. Always happy to answer questions and try to point you in the right direction.
Perfect. Thank you, Robert, so much for this presentation today, and everybody who attended. Hopefully that you got something out of it. I know I did. Everybody have a great rest of the day. And Robert, again, thank you so much for presenting today. This was great.
Thank you. Have a good day.
Bye.